Hey guys, Mike here. So obviously, we got sold off today by the institutions. Had some news come out this morning, which I'll go into. Just had some earnings released. And I'll go into those as well. And then stuff to look out for because obviously we got CPI data coming out tomorrow. Probably the biggest CPI print we've had, right? Because I think you have obviously two different groups going on. One saying we've peaked, the other saying it's going to come in red hot. But let's look at what didn't happen today. The White House did not come out as far as I saw like they did the last two times and warn of CPI data. That kind of leads me to believe they got a speech ready to go because they know what it is already if it came down for them to take credit and everything, right? And the other thing was in the last, usually from like 12:30 or 1 o'clock to 4, the markets have sold off drastically, leading to CPI. It didn't do that today. And then especially the last 3 hours, it went up and then traded sideways. All right. And so it wasn't down anywhere near as far as you would think it was when you look at those high growth stocks. But then, of course, you have like Apple, Microsoft, Green. And so those are two things to kind of look at because the big boys, they got this data already. You can guarantee you BlackRock's already looked at it. They got a direct line into every single president since like the 90s, for God's sake. So they call him for advice. And so on the financial market, so BlackRock's already got the news. And, so those are things to look at. And we'll go into some more details of some worrisome things I discovered today and yesterday that I'm going to show you at least. And so we'll see on that. But, I want to start you off with one thing and say, sometimes you come across stuff where you just shake your head. And I've had people comment say, I don't understand what you're talking about. What do you mean you don't know what kind of market we're in? Right? And understand this. This is what I'm talking about. Do you know that if you would have sold everything you owned, most people, January 1, and you would have bought GameStop, did I say GameStop? GameStop, that's what I mean, and just held that through, that would have been your one stock you had all year, that you would be up almost 18%. Did you know that? Look at this right here. You would have been right there. This is year to date. That's where you would have bought it. That's where you'd own it. That is up. Isn't that amazing? It's outperforming the SPY, the QQQ, Russell 2000, any high growth stock I can think of for that matter, or any growth stock really is outperforming all the FANG stocks. I mean, it's amazing. That is the times we live in, though, that a meme stock is kicking butt and taking names in a bear market. That's amazing, right? And so I just want to point that out there to you. Hey, next time we go through this, if the meme stocks are roaring, now we know to sell everything, buy meme stock. We're good to go. And I might say that jokingly. Please don't take it serious. But it's congratulations to the folks holding it because it's probably one of the only green stocks this year. That's amazing. I mean, it's mind-boggling in a way, right? But sometimes you just run across stuff like that and you're like, wow, man, so much for research. Anyway, and so of course, we had NVIDIA come out yesterday with bad news, their preliminary earnings, that is. And then we had Micron come out today. They warned as well what was going to happen during their earnings. So of course, semiconductor stocks came down, and so that's no shock at all, but it drove the whole sector down. And they actually had bounced right off resistance that have been there since January, I believe. And so it's no shocker in a way they sold off to begin with. And if you go into earnings, it just happened. Roblox misses on top and bottom line, down 14% in after hours. And you can see it just wasn't good. I mean, they reported 52.2 million average daily users. That's shy of a million, okay? That's not good. That's a big miss, okay? 30 cents versus 21 cents expected, missed that. Obviously, and that's a loss, by the way. I'm sorry, not a gain. And then it only missed revenue by $5 million, which in this day and age seems like it's just fantastic. And, just going over certain things, bookings declined by 4% year over year because remember, this was a big thing during the pandemic. Everybody shut in their house playing Roblox. And if there's one statement you need to take away from this, and at least they're being upfront and honest about it, it's the fact that they come out and say, look, they're in investment mode. And so that's going to put a little bit of a drag on earnings, but these investments are the right ones and they'll pay off in about 3 to 5 years. And then that leads us into Coinbase, right? It drops on $1 billion loss in the second quarter. Yes, right. It lost $1 billion in the second quarter. Revenue declined 64%. It lowered its full year forecast. It trimmed its employees by 18%. You can see right here, $4.98 loss versus $265 expected. Revenue $803 million, missed that by about $24 million, which again, in this day and age, I guess people don't think that's bad. Again, revenue declined 64%, which is just, I know you just read that multiple times, is shocking. But the kicker is, after hearing that, you're probably thinking, wow, this stock has to be down 20% easy off of that, right? No, of course not. This stock is down, last time I looked, 5%. Again, it dropped 10% on the day before they reported earnings, which kind of lets you know people may have knew what to expect, right? I mean, you think some people ahead of time already knew what to expect, but again, big institutions are in this one. I mean, BlackRock's getting into crypto big time, and they're the biggest out there in the world. And so, you know, that's what you can expect from it right there. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so that leads us into some things that have been happening, right? And some things we can look at here. And one is, you know, we've had this huge bounce, right? And there's this signal that it hadn't quite triggered. And of course, you've had a couple sell-offs, so it definitely has not triggered yet. But if tomorrow's CPI data comes in better than expected, again, we don't know how the market's going to react because there's been a huge run-up since June. I mean, a huge Roblox, it doubled in 48 days, okay? That's not good. It's not healthy, never has been, but that's what it did, right? And so you see a major sell-off after a miss, which I don't know why people were shocked at miss because their revenue's been declining, so has their users. I don't know why people were surprised by that. But, you know, when you look at it, there's this indicator that's coming up here, and it's when you get beyond, you can see it right here. When you get beyond the first standard deviation, there's the second standard deviation. When this is hit, more times than not, you will see it continue, and it will be a nice positive run after this. Doesn't mean always, okay? Which, of course, the catalyst for this to be hit is going to be the market reacting very positive to the CPI data. That's what's going to make this hit. And more than not, though, it is positive. I mean, you have some huge declines, but, you know, using a bear market, but looking at all of them, and I've looked at the chart, you know, most of the time, I say majority, you actually get positive stuff happening in the next 6 to 12 months. Not saying right away that's what's going to happen. But the thing to be concerned about is the hedges, right? Hedge funds, bearish bets have increased on both stocks and bonds. You can see it right there. I mean, they've just been increasing this whole time. And you can see there, that's July down at the bottom. And 2022, as you can see. So, you know, a lot of, I don't know what the bets are on. Obviously, it seems like the bets are going towards CPI not being that well, or even if CPI comes in better than expected, just because of the big run up, they're expecting a sell off or something, right? Just keeps us in this bear market. And the other thing to worry about is all the selling. This is executives and insiders at these companies, excuse me, actually doing a lot more selling than buying. That's that little thing right there, taking us below the zero mark or the neutral line. And you can see at the bottom with the bars down there at the bottom, it's pretty plain to see that a lot more selling than buying is happening right now in a lot of these companies. And leading the way was none other than Larry Fink right here, selling $30 million of BlackRock stock August 8th. And the reason why that's important is because that's a huge sell for him. The only time he had something bigger than that was right before the March crash in 2020. And remember, this guy's in charge of the biggest hedge fund in the world. Okay, I forgot how many trillions of dollars they have under. Is it 9 trillion? It's some crazy amount of money that they have under their umbrella there. So it's a lot. Again, direct lines into all the presidents this is like 1990 or something. And so, you know, seeing that, does it mean anything? It may mean nothing. Right? It may mean nothing, but understand what happened in December. You had a bunch of CEOs and executives selling their stock at the top right before we started to crash in January. Okay, same thing happened. Remember, they have a lot more insight than we have. And so that's why they call us dumb money. Not because our IQs are low, not because we're stupid, because we don't have access to what they have. And unfortunately, insider trading happens all the time. It's just nobody does anything about it. So they use that information for their buy and sells too, and they say, I didn't do it. I don't know what you're talking about. I just got lucky. You know, and so that's where we're at, right? A lot of selling insiders, a lot of hedging from the hedge funds. But then again, you know, still somewhat a lot of momentum into this move up. And it's all about the CPI data. I understand, what's that for CPI data? Nothing really, right? Because you have no Fed meeting this month, no rate hike scheduled. I mean, what news is going to come out, right? We just had this hot labor report, which, you saw that the market was barely affected last Friday by that labor report, right? And so, you can see that run, even though August is one of the worst months in an election year for stocks. Obviously, you can tell that hadn't been the case at all, because after July 15th, going into this month, it was supposed to be bad, and it hadn't happened. You've seen just this huge run up in all these stocks. And, you see something like Coinbase report, they reported barely affected, right? And so some of these stocks have just been so beaten down that, some people feel they found bottoms. We'll see. This is going to be a fun time tomorrow. We'll know, when it hits, what's going to happen. And so, and it's funny because you would think if it comes in under, the market would go up, right? But you just don't know. It depends on how much money's on, the puts and how much money's in the calls. That's what we're basically going to see. So, because I was going to show you something and I forgot to show you, Upworks, right? Disastrous earnings, down 12% when the bell opens. Immediately, within like first 30 minutes, goes green, and then sells right back off, down 12%. So if you don't think the algorithms, the traders, and all that stuff own this market right now, you got another thing coming. All right, so buckle up. It'll be fun tomorrow. So I'll see you later afterwards, and we'll see what we get. All right, have a good one.